Hi, I'm Catherine Tennyson. I graduated in May of 2016 with my bachelor's in business administration from Rogers State University and with my master's in business administration from Southern Nazarene University in March of 2018. During this week's Money Monday, we'll discuss the basics of credit scores and how to plan for big purchases. Today, I'm here with Ashley.
Hello. Thanks for helping me with my cell phone plan last time. Now I'm looking at buying a car, but I just don't know where to start.
A good place to start is by knowing what your credit score is. Do you know your credit score?
No. What's a credit score?
Your credit score is calculated based on your credit report. Your credit report consists of information about your credit record, past and present. Lenders use credit scores to determine if they want to loan you money. It tells them if you're good at paying your loans or bills. It also tells them if you have too much debt. They use your credit score to make decisions on how much to loan you, what your interest rate is, and how long they're willing to let your loan note be, or how many payments they want it to be. Basically, it tells them the likelihood that you're going to pay back the money that you borrowed.
Well, of course I'm going to pay back the money that I borrow.
Well, you know that, but in the lender's eyes, the lower the credit score, the lower the chance that person will pay back the loan. The higher the credit score, the higher the chance that person will pay back the loan. That is why those with low credit scores, ranging from 300 to 649, have high interest rates and are given low loan amounts. And those with high credit scores, ranging from 750 to 850, have low interest rates and get high loan amounts.
So, what factors impact your credit score?
There are many things that affect your credit score. The first is your payment history. Do you have a habit of paying your bills late or paying on time?
On time.
That's good because late payments are reported to your credit report, and so are delinquent accounts, which are accounts that have been sent to collection agencies. Other factors include how much revolving credit you have, such as credit cards, how much of it is used, the diversity of your credit accounts, such as car loans, credit cards, student loans, mortgage, and how much you owe.
Well, the only loan that I have right now is my student loan.
Student loans definitely affect your credit score. So does your ability to manage these loans. Lenders are going to pay special attention to your ability to repay others who have taken a chance to lend you money. The length of your credit history also affects your credit score. They look at the age of your oldest credit account and the age of your newest credit account and average the age of your credit accounts.
Well, that's a lot. Is there anything else?
The last thing that affects your credit score is how many new credit accounts you have, meaning new accounts added in the last year, and the number of hard inquiries that you have. A hard inquiry is when a lending company pulls your credit report when they are deciding whether to loan you money or not. As we just discussed, all credit scores are based on 5 factors: payment history, amount owed, credit length, type of credit, and new credit. It is important to remember that different credit scores weight each category differently. For example, the most common credit score that people know about is FICO. It is often referred to in several commercials by credit card companies like Discover. FICO assigns the following weights in calculating your credit score: 35% payment history, 30% amount owed, 15% credit length, 10% type of credit, and 10% new credit.
So I have more than one credit score, and they are all different?
Yes, and they are. But most will weight them with payment history being the heaviest and the type of credit and new credit being the lowest.
So what is my credit score used for?
The most common use of a credit score is when you make big purchases that require you to get a loan, such as buying a car or a house. However, credit scores are used for more than just purchasing. Utility companies use them to decide how much money you need to put down. They are also used when renting a house or an apartment, leasing a vehicle, or renting furniture. Credit unions and some banks use them to decide if they want to allow you to open an account with them. Depending on the type of job, some employers also use your credit score to determine if they will hire you or not. These types of jobs mainly revolve around money, such as accounting, banking, brokerage firms, or management jobs. So it is important to keep an eye on your credit score and work on making it better.
How can I check my credit score?
For a general credit score, you can use companies like Credit Karma or Credit Sesame to check your credit score. They normally look at one of the 3 nationwide credit reporting agencies: Equifax, Experian, or TransUnion. This type of credit checking is called a soft inquiry and does not affect your credit score. However, companies like Credit Karma may not have the most up-to-date information on your credit score, so you may want to know more current and detailed information than what those companies can provide. If this is the case, you can get your full credit report from each of the 3 credit reporting agencies. Getting your own full credit report is a soft inquiry, so it does not affect your credit score. However, the 3 credit reporting agencies do charge you money to get a copy of your credit report. But in 1970, the Fair Credit Reporting Act was passed, and it allows you to get one free report from each of the 3 credit reporting agencies once every 12 months. Pulling your credit report annually allows you to check for errors or fraud. You can strategically space out these free credit reports by pulling a different one once every 4 months to stay on top of your credit score. If you would like to learn more on how you can get your free credit report, please visit the Federal Trade Commission's Consumer Information page.
What happens if I check my credit and something is wrong?
If you ever think that your identity has been stolen or there is a big data breach from a company that contains your financial information, then you should place a freeze on your credit report. This prevents anyone from being able to create a new credit line using your information, including yourself. To do this, you'll need to contact each reporting agency to place a freeze on your credit reports. You'll then need to report the fraudulent information to the credit reporting agencies. It will take time for it to be removed, so keep that in mind and stay on top of it. If you place any freezes on your credit reports, it is important to remove them before attempting any purchases that will require access to your credit score.
Okay, so now that I'm aware of my credit score, what else do I need to do to prepare for buying a new car?
When you are planning on a big purchase such as buying a vehicle, it is important to also look at your budget and determine how much you can afford to pay. Additionally, you will want to decide how much money you need to start saving to afford the down payment. Making big purchases is not something you want to do quickly. You want to take your time to shop around for the best deal and work on building up your credit score in order to get lower interest rates and payments and to save money. Think of it this way: the more money you put down up front, the smaller the loan you must take out. The same concept can be applied when purchasing a house or when looking for a new house to rent. Although if you're thinking about moving, it is best to start looking before your current rental contract is up. This way you're not in a difficult situation.
Wow, this has been really helpful. I have a lot to think about.
It is a lot to consider, but by taking your time, building your credit score, and monitoring it for changes or fraudulent activity, you will be better prepared for these types of big purchases in the future.